So we're going to get into Chapter 11, and we're doing the other half of the itemized deductions. We've kind of been on the top. Come on. All right. So we've been in those medical expenses. Okay. Talked about it. We talked about two. Remember, I talked a little bit about the long-term care and what it does, the state. Remember that adjustment too, because it's non-refundable on the state, so it can eat up your tax bill. Okay. So that it's on that. So that does carry over, but there's limitations based on age and income. So.
But if you reduce your federal, then your state would be as high. So basically, it helps you in that respect, right?
For
the long-term care.
Yeah, but based on your age, there's a limit as to what you can take. What we did on the example when we were in class, if you look here, this individual was 41 or 42 or something like that. So we had that?
Yeah, that's in 10, right?
Yep, that's where we're talking about the limitation. When you go over to the state side, oops, because he only had after his household credit, he only had $139 that he needed to wipe out his tax bill. So on this one, the IT 201 ATT, that's where that carried over to the state side on that. Okay.
Just sent me a text message. Show that one off saying tax reform bill being discussed live on the Senate floor now on C-SPAN.
Yeah. Yeah. Great. So
She knows I'm into the taxes.
sometimes C-SPAN is the best thing to do because you don't get any editorial. You can just watch it for yourself and make your own decisions. Got to that point during the election, I was like, okay, I just need to shut this. I just need to hear what they're talking about. All right, taxes paid. We talked about that. Okay. Again, you know, that sales tax is pretty much dead already.
Yeah.
Yep. But again, 9 lives, you know, because when you have estates and you get these states that have high sales tax, you know, that's where sometimes they kind of coattail things in those little bills that get past the 11th hour. So.
Maybe getting the federal but not the state.
No, this is for federal itemized. Yep, for federal itemized. Okay. And then income tax, they're talking about that one. So, you know, again, there's a lot of things in play here. We talked about the fact that we'll get into a little bit more with the home office. And if you own a double or live in a rental that you are renting, what happens when that stuff comes over. Very similar with the interest. We talked about the fact that if you're holding a mortgage for somebody, they will probably put your information on there that you're holding that mortgage for them. We talked about points, PMI, talked about the gifts to charity. The big thing is, you know, making sure that you understand the limitations so that if you go over that $500, you got to be a little bit more due diligent. But like I said, in this day and age, you know, create a log, okay? All right. So, Chapter 11, we're going to get into the other part, or the bottom half of the Schedule A. Some of the stuff we've talked about already, but we'll get into a little bit more detail on some of the other stuff, okay? We're going to talk about the casualty or theft loss and compute any deductible from the Form 4684. You don't see a lot of those. I think, you know, if I do one a year because somebody had a fire, you know, it depends on their insurance too, because the limitations that are with that. All right. We'll chat about the net operating loss. We'll touch on it. Again, going to come back to that one because it's easier to see when it's in action on a Schedule C. Okay. Deductible employee business expenses. We're going to talk about that one, but again, on the chopping block. Okay. So, you know, it's in there for 17 right now, but if things change for 18, when you're talking with your clients, there could be a change when you talk to them about that. So work-related education expenses. We'll talk about things that are subject to the 2% threshold. Very similar to what we saw. Again, when you talk about that threshold, you're talking about you have to get to it before the meter starts, okay? Not just because you get to it that you get to take all of it and then some, all right? And the overall itemized deduction limit for those higher incomes. All right. And we'll talk about some of the miscellaneous that aren't subject. All right. Casualty and theft losses. Several publications that you have there that talk about disasters. I'm sure if you were somewhere with the hurricanes and things like that, depending on how somebody's insurance went. I know I have somebody that was in right before all the hurricane stuff, and she had just become licensed as a claims adjuster, independent claims adjuster. And she was in to do her stuff and informed me she probably wouldn't be back for a year because she was headed to Texas. So I'm sure she's got plenty of work. But this section deals with casualty and theft losses along with losses on deposits. Losses resulting from casualty and theft are generally deductible. Deductibility depends on which category the event falls into. Personal use property or business and income producing property. Okay? And then that's further divided. All right? Casualty. A casualty is the damage, destruction, or loss of property resulting from an identifiable event that is sudden, unexpected, and or unusual. Okay? So, a sudden event is one that is swift, not gradual or progressive, unexpected, and the unusual event is one that isn't day-to-day occurrence that is typical of the activity in which the taxpayer was engaged. All right? So examples include car accidents, earthquakes, fires, floods, government-ordered demolition of a home that is unsafe because of a disaster, mine cave-ins, shipwrecks, sonic booms, storms, terrorist attacks, vandalism, and volcano. Kind of reads like the writer on your health or your home insurance,
No,
doesn't
it's
it?
like the exclusions.
So,
We get exclusions like this all the time.
so, but then it has non-deductible is the damage or destruction is caused by the following: accidentally breaking articles, a family pet, a fire if the taxpayer willfully set it, or paid someone else to, or a car accident if the taxpayer's willful negligence or willful act caused it. So basically, what does it say? That's where it has that you have to, you can deduct those things that are unexpected and not your fault. Yep. And then we get into the whole thing with progressive deterioration is a steadily operating cause or normal process rather than from a sudden event. So, water heater, termites, insects, worms, pests, all those things that kind of are ongoing.
What about divorce when your wife steals half of everything?
Are you trying to, is that theft or is that casualty?
That's kind of, well, it could be both.
So, theft, it talks about the Ponzi type investment schemes. I don't hear much about those anymore. They've kind of, is there any in the news lately? So, since the Madoff thing, you don't hear a lot about them. So, all right. And then loss on deposits. Okay. The thing that it talks about here is that proof of loss, to deduct a casualty or theft loss, the taxpayer must be able to prove that they had a casualty or theft. They also must be able to support the amount taken as a deduction. Okay? And if claiming an ordinary loss reported as a miscellaneous itemized deduction on Schedule A, subject to 2% of the adjusted gross income limit. The maximum amount that can be claimed is $20,000, $10,000 varied filing separate. Reduced by any expected state insurance proceeds, taxpayer cannot choose to claim as an ordinary loss if part of the deposit is federally insured. So what does it say? You got two thresholds really to get through, don't you? What's the first one?
2% of APR.
Yep. And then what's, so yeah. And basically it's saying what?
So for a business, so I don't understand. I mean, it includes a business or a personal activity?
On the personal on the Schedule A.
Okay. So,
Yep.
but for a business, you can have a much higher deduction, correct? Or is it
On-
still 2% of APR?
Well, it would be on the business return on the side there. So basically, what is the other threshold we have to get over? We got the 2%.
$20,000.
But what else is in play? What did it say in there? Insurance.
The insurance.
Yeah. So if we're on a cash basis where it's out of pocket, you know, and that's why I say sometimes it's very hard unless it's something, you know, I had one that I had to do 2 years ago. Gentleman landscaper renting a barn attached to a storage area. Found out that neither he nor the landlord that he was renting from had the proper insurance to cover all the mowers. He brought in pictures of it, and they were just ashes. Yeah, so, all right. Okay. Figuring a casualty theft loss. Figure the amount of the loss using the following steps. Determine the adjusted basis in the property before the casualty theft. So this is 1, 2 that comes into play. Okay. Determine the decrease in fair market value of the property as a result of the casualty or theft. From the smaller of the amounts determined in 1 and 2, subtract any insurance. So isn't the IRS very nice? You have to take the smaller, not the greater. Okay. Before the amount of casualty loss can be computed, 3 things must be determined: the cost or adjusted basis, the property's fair market value before the theft, and the property's fair market value after the theft. Okay. All things that are on the form 4684. Okay. Where you're doing all the different calculations that you put into what that loss was. All right. And do they still have? There is. Okay. So one I've always wondered about, we lived basically a block and a half from Flight 3407, where we used to live. So it crashed in our backyard. So, and my wife had not been back from Iraq too long, so she went into mode. But the gentleman that lived in there, you ever hear the story about the baseball cards? He was the gentleman's house that it crashed on. He was a huge baseball card fanatic. And 2 days before, somebody at Channel 2 was going to do an interview with him. And she went and talked to him. And the gentleman that lived next door, my wife knew because he was a teacher at Transit Middle School when she was working there. And he saw him sitting at his dining room table with his baseball cards because he was getting ready to do the interview. Well, to get ready for the interview, the person at Channel 2 had taken one of his baseball cards to do a little promo. And that's the only one that survived. The rest he had on his his dining room table where he was sitting at when the plane crashed. Because remember, his daughter and his wife climbed out the attic or the second floor. So, but yeah, when I heard that story, I was like, wonder if anybody put the baseball cards in there. So, but yeah, that was an eerie night. So very eerie. My wife picked up on it right away when she heard the sound of the plane. We were outside packing to leave because it would have been February break for the kids. So she heard the plane. She's like, there's a plane going to crash. And sure enough, block and a half from our house, fireball.
It was the same as a lot of us who were in the service. When someone says, that's fireworks.
No. Yeah. I went through that for about a year and a half on the 4th of July. We couldn't even, she was out of bed on the floor in mode as soon as she heard fireworks when the windows were open. All right, great example of on page 1112, where we kind of see the whole action of what goes on in the 4684. So we'll kind of use that to tie this together on here. Like I said, we'll come back with some of the stuff that is on the business because I love to address it when it's in mode with everything else. Okay. So we have Joseph Steele. Had a car accident in 2016. The cost of the car was $14,469 when he purchased the car last year. The insurance company reimbursed him was only $2,250. He did not have collision insurance on his car. The fair market value of the car before the accident was $13,100. After the accident, it was $6,000. Joseph's AGI was $25,000. Okay. So we can see his 2013 Toyota Camry. All right. And on there, it says line 1, enter the description of the property. Okay, we did that. Line 2, enter the adjusted basis of the property before the casualty, theft, or loss. So that was, yeah, what he paid when he purchased it last year. Okay. Line 3, enter the insurance reimbursement. If the reimbursement is more than the adjusted basis, enter the amount of the gain on line 4. If line 3 is less than line 2, skip line 4. Oops.
the fair market value of the car before the accident, would you do that on, say, Edmonds or Kelly Brook or something like that? Because you wouldn't know.
Oops, I just missed a phone call from who?
National Grid.
Yeah, saying evacuate. Okay.
Okay, so determining this 13,100, how is that determined by the insurance company or by you? Or?
Well, fair market value of the car before the accident was, I guess, you know, at that time, you probably have to do some blue book.
That's right.
Yep, you know, some type of blue book value, okay? Has the fair market value after on line 6. So you subtract that, you get $7,100. Yep, okay? And then you enter the smaller of line 2 or line 7. Okay, all right. So there's that. We subtract 3 from, don't you love the IRS and their subtract, you know, subtract this, go this is smaller. And by the time you've done 5 lines, you're like, well, why didn't I just pick that number right there to start with? So, so you subtract that from line 8. All right. If 0 or less, enter 0. So he's got 48.50. Okay. I always love the ones. Enter the smaller of line 10 or $100. Okay. All right. We subtract that. We got 47.50. Enter 10% of your adjusted gross income, which is 2,500. And then we have his loss of the 2,250 is what we get down to. Okay. So can you kind of see how things get a little bit such that what?
Not even worth claiming sometimes.
Well, you know, 25,000, you know, this one we had to choose a low AGI to show it because, you know, at 25,000, but he's buying a $14,000 car.
He's cheating on his taxes right away.
Well, but you know what I'm saying is that, you know, if he made 50,000, you know, it's very hard to show any loss. So, you know, because if we double down on that, then we got 5,000 there, and then we're just above our 4750. So, you know, that's where it's very difficult with that. Okay. All right. Okay. Like I said, we'll come back to the ones with business income and stuff when we do our Schedule Cs. All right. And same thing with the net operating loss that we talked about on 1115. We're going to come back and we'll hit that when we see it in action so we can see all the spots it goes to from a Schedule C. It's kind of hard to just pull this number out of the air and see where it's doing it. So, okay. So that way we can spend more time because you guys will be good on the C's, so we'll be able to spend more time on nitpicking all these little idiosyncrasies, okay? A lot of times I have to spend so much time. My night class, it's going to be just the opposite because I'll have to spend probably a whole class just trying to get depreciation through. So, which, you know, teaching people how to calculate depreciation by hand is always an experience and a half. All right. All right. Employee business expenses. Employees may be able to deduct ordinary and necessary. Gotta love that, right? New terms. We have qualified and now we have ordinary and necessary business-related expenses for travel, entertainment, gifts, and transportation. Ordinary expense is one that is commonly accepted in a trade or business. A necessary expense is one that is helpful and appropriate for the business. An expense does not have to be required to be considered necessary. All right. And again, only on the reimbursed expenses. We go round and round on this one with a lot of people when we talk about their mileage. Sometimes they get a certain amount. My wife used to be that with her old job. She used to have where she was reimbursed part of the IRS standard, okay? So we had to kind of back that out because we couldn't take the full amount because she was reimbursed in her pay. All right. Okay, travel expenses. May be deductible when the employee is traveling away from their tax home or their business, profession, or job. The employee is traveling away from home when duties require the employee to be away from the general area of their tax home. substantially longer than an ordinary day's work, and sleep or rest is needed to meet the demands of work while away from home. Where does that one come into play? Yeah, what else?
Your insurance adjuster.
Yeah, what else?
Politician. Truck driver.
Yeah, over-the-road truckers. Okay, so when they're in there, because there's that per diem that they get based on the, and on the break you can look at it. Well, they get things because of the DOT limitations. They get what's called a per diem for over the road, because they always have to bring in their log books for the amount of days that they're out. So, and there's times the New York State's ask, and I've had to sit and scan pages upon pages upon pages of log books to send in. So, all right. All right, tax home. Generally, as employees' tax home is a regular main place of business or post of duty, regardless of where they maintain their family home. Temporary assignment, if an assignment from the job is away from one's main place of work, it is temporary. The employee's tax home does not change, okay? Indefinite assignment or job. If an assignment is a job is indefinite, 1 year or more, or expected to be, location of the assignment becomes a new tax home. So think about that one.
Well, so when I was a consultant, the company paid for our properties that we lived in. That
Yes.
was taxable.
Came through on your W-2?
Yeah, at the time. And the company in effect said we will pay the taxes on it.
Yes.
But even though they sent us away on paper, it was still a taxable. Yeah.
Uh-huh.
Which really confused me. When you think of it, I'm sending you away to work on a plant somewhere.
Were you gone for more than a year?
Oh, yeah, 5 years.
Because that would be your new tax home.
You think so?
Yeah. Yeah, I'm not sure. I'd have to know more details, but you know, think about, again, you know, we just talked about the casualty, theft, or losses, but think about where this comes into play right now. My little adjuster that's taken off to Texas. I'm sure she's going to be there more than a year. Okay.
Now, her company pays for everything.
She's independent.
She's independent.
Yeah. Okay.
Then she's got to pay.
Yeah.
And claim it.
Mhm. So, but you know, other things, utility companies, some of these guys that are placed, yeah, you know, where if they're going to an area, you know, probably construction people, you know, there's a lot of times, you know, with natural disasters that they can be placed someplace for a year. Guys that do road work, you know, if they get other companies based in New York, but they get a contract down in Kentucky or something to build a tunnel. So what's that?
So like a contractor that goes, you know, like a programming contractor.
Programming contractor, like a computer programmer?
Yeah, that
Okay.
goes on site,
Well, that's what we do.
you know, project manager type person.
Uh-huh.
So they're like, they get sent to go work in, let's say they live in Buffalo and they get sent to Houston
Mhm.
to work for a bank, and they're there for 6 months.
That's temporary.
Okay. And the company's paying for pretty much everything. But if they want to go out to a nicer dinner or
You're creating a gray area because, you know, as a direct business expenses, ordinary and necessary to do the job.
or they have a dry cleaning bill that's more than what they would have paid in Buffalo down in Houston.
Then you're getting a little bit more because it's ordinary and necessary.
But generally, the company pays that, they'll fight you for it, and some of our guys,
Well, they won't pay the dry cleaning bill.
our guys, do they?
Yeah, it depends on the arrangement.
Especially if you have to wear clothes, I mean, decent clothes to these stupid programs.
Yeah, you know, and like I said, it goes back to,
Ordinary and necessary.
exactly, you know, when you got it, you know, just because,
So if you were doing it at home and you had to do it here, and the cost was more, you could do the difference.
yeah, if, you know, they're only giving you the stipend for, you know, the value meal at Wendy's.
Right.
But you want to go out and have filet.
Well, it's not even that. Let's say you wanted to eat healthier. It's more expensive to eat healthier than it is to go and eat a cheeseburger.
And
You know,
again, ordinary and necessary, you know, you'd have to,
you know, a salad could be $15, where a cheeseburger could be $7.
yeah, I mean,
Here's a good example. When we were away, we had really nice places to live in. In fact, I was on the lake. Now, I ordered a lawn service and a snow service. The company did no problem, Dan. When the guys sent a bill for the lawnmower they bought, the company said, no. You're on your own. So I had all my stuff done, and the other guys got refused.
Because they were to come along themselves.
Oh, well, they're buying equipment.
Okay.
So, to address your meals, as it says here, meals can be deducted in either of the following situations. It is necessary to stop for substantial sleep or rest to perform duties while traveling away from home, or the meal is business-related entertainment, okay? So again, the IRS kind of says you got to eat.
What page you
1118, okay?
on? Oh, I see.
Standard meal allowance allows a set amount for daily meals and incidental expenses, fees, tips, orders, whatever. It does not include laundry, ironing. For travel in 2016, the rate for most all localities states is $51 a day. So again, you get into the per diem thing, and it depends on where you're at. Remember, you were asking about different, some places you could be where, you go to, the local mom and pop place and they got a $5 salad, but you're in New York City and it's a $15 salad.
Right.
So you get into per diems. And
Because I had that a lot when I traveled. It's like, I would go out to dinner at home, but going out in Buffalo is different than going in New York City or going in, Dallas or.
yep, there's a whole section in your quick finder. See where it says meals and incidental expenses per diem rates divided by states and cities. So, if we go even into New York, we go, if we do Buffalo, it's 64. We go to New York City, 74. So, so you can kind of adjust depending where you're at, okay, on that per diem. Now, there is a high-low method for over-the-road truckers and DOT. So I'll kind of show you that when we do the 2106, okay? Table 11, 1119, travel expenses you can deduct. Talks about transportation, tax, commuter bus and airport limousine, baggage and shipping, car, lodging and meals, cleaning, telephone, tips, and other. And what does it say? Similar ordinary and necessary expenses related to your business travel. Okay? So again, most of it is you have to prove. I've heard Esther talking to people about their businesses and setting it up. I think I heard her talking to you the other day about ordinary and necessary on something.
Yeah, it was for the real estate.
Yep.
Folks.
So, but yeah, you have to, that ordinary and necessary, okay? Whatever that may be. Entertainment expenses. Business-related entertainment expenses may be deductible when the employee entertains a client, customer, or employee. These expenses must be both ordinary and necessary and meet one of the following tests: direct related test or associated test. Generally, it's 50%. Okay? So, entertainment expenses. What would fall in this?
Lap dance.
Taking a client up.
We're recording this,
You
Patrick.
know how many.
We're recording this, Patrick. Okay?
You know how these businesses do it?
Okay?
Taking a client
Sales
out to dinner for a introduction meeting.
Yeah. So obviously you want to, if you're trying to convey a persona as to what your business stands for. Yeah. So taking them to the Old Country Buffet for all you can eat versus somewhere nicer. So.
We had a case where the business came into town to take us, all the guys making a decision on the engineering. They asked us to bring them our wives.
Mhm. Yep.
They paid for it.
What that you're.
So, why then?
David, we're recording. Okay?
It's Patrick.
Okay.
Just
Do-
trying to clarify.
Again, the disclaimer, due to self-incrimination, please do not say anything that you do not want recorded. Okay?
We know you hit it.
What's that?
You hit it now.
Some of it. Does the 50% limit apply to your expenses? Again, great little flow chart. And it talks a little bit about all employees and self-employed persons can use this chart. So again, when you have somebody that's on a Schedule C, that's great to come back to this because there is a line on the Schedule C that talks about the self-employment. All right. Okay. Patrick, on the top of 1122 for you, deductible entertainment expenses that is outlined here. Examples include entertaining guests at nightclubs, at social, athletic, and sporting clubs, at theaters, sporting events, on yachts, on hunting, fishing, vacation, and similar trips. Okay? All right.
So this is our.
The other one that's important is the $25 gift. Okay? Ever wonder why all the bosses just give $25 Tim Horton gift cards? All right? That's, you know, that little thing, that's all that you can do. Okay? So that's that limitation on there.
Wish your name is great. But it's hard.
Okay? All right. Another great one is to remember is the one on transportation expenses deductible, is that little circular flow chart. I will show that to people all the time. Okay? So we start at home. Where do we go?
Home Depot first.
Okay? We went,
After that, you can find only one.
okay? If we're going to our regular or main job, never deductible. Okay? And as you can see, if we go to a temporary work location, and who would that apply to a lot that you may see as a W-2 employee?
Real estate agent. Oh, no, this is-
Yeah. What about a VNA?
Yeah.
A lot of times they go to the main office to pick up the supplies or whatever for the day
Yeah.
and their assignments, and then where do they go?
Patients.
Yep. Their temporary work locations, and it depends on how the VNA does it. Some of them are reimbursed, some of them are not. Okay. If you go from your regular job to your second job, so you're working days at EG Tax and moonlighting at Tim Hortons, okay, you can do that. But then what do you do when you go from Tim Hortons to go home? Can't deduct that. Okay. Yep. So,
It's just,
all right. And no, you cannot stop at Home Depot on the way home from Tim Hortons.
you buy supplies for the job. Oh, good.
Okay. All right. So that chart's very good to show people on as far as everything on there. Record keeping. This one, you know, people have to have, and we have little books, they have to have some type of system where they can account for every place that they are. Okay? You know, if it starts out that they have a calendar and says, you know, this is where I was that day, maybe they use Google Maps, but to substantiate why they were where they were that day, they probably need something that shows some type of receipt. Okay? So using a Mary Kay consultant, if they made a trip and they're recording it for a party, you know, the thing that's going to substantiate that they made that business trip is probably having a receipt from somebody at that party that purchased goods. So, you know, there has to be something to close the loop. You know, you just can't have a calendar with all these squares and say, I was here, 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 and here, and here's my Google Maps to show how far the drive is, unless there's something that says that you were there for a reason. Okay? All right. Okay. All right. 1126 to get into reporting unreimbursed employee business expenses. All right. So generally, we are going to use that form 2106 or 2106EZ. All right. And again, we're talking about W-2 employees, but what is it subject to?
2%.
Yeah. And sometimes that's a very hard threshold to get to. You know, it just, for a lot of people, it's just very difficult to. All right. Unless you have a job that is underpaying you for the amount of time that you're spending traveling doing it and not reimbursing you for anything, you know, then you're probably going to get there. But if they're reimbursing you for most of your stuff, it's very difficult to get to. Okay. You know, even on that 2106, or where we get into something where maybe there's a home office or something like that, again, very tough. Okay. You know, somebody's working for home as a W-2 employee. You know, we can probably use the home, but, you know, a lot of my clients, sometimes we have to do justification that they brought in a separate business class internet, you know, things like that. So, all right. Okay. All right. Now, down on 1128, for the stuff that goes on the 2106, that's a lot more relating to the mileage, the travel, the business, stuff like that. Some things you don't have to worry about getting into a form 2106. you can just list them on your line 21. Things like union dues, small tools, dues to professional organizations, professional magazines, employment agencies, the cost to look for a new job in the taxpayer's current occupation. All right? So if I'm a nurse and I've decided to become an engineer, can I write off my job search? If I'm a nurse and I'm looking for a job in another state, yes. Okay?
But do you have to show that you went for interviews, or you just show that you applied? How would you do that? How would you prove it?
Copy of the email.
Yeah, something, application, you know, that I suppose if you're doing it through Indeed or something that shows that you applied, or, you know, ZipRecruiter or whatever that shows that you're doing this. So, okay. All right. On page 1130, 1131, it kind of shows the 2106 EZ. Most of the time you can handle things within that. The only one that it's tough to sometimes is when you get the over-the-road DOT. Okay. All right.
But you wouldn't do the 2106 EZ for like the contractor. You do it for your vehicle and everything like that. That's usually another form.
If your W-2 employee is a contractor?
If you're, say, a contractor, you go from job to job and you put in the mileage, you have to do the 2106.
If are you a W-2 employee or independent contractor?
Independent, sorry.
Then you're on Schedule C. Yeah. Yep. Yeah, the 2106, you know, we're mainly talking about W-2 or statutory employees. Okay. All right. Okay, and then on 1134, we have work-related education expenses.
Can I ask you another quick question?
Sure.
So a truck driver on the road, he's W-2, 10
A lot of, well, it depends. I mean, it depends what they're set up.
His own truck, he's probably 10.
Yes, if he owns his own truck. If he's driving for somebody else, then, you know, he has, they pay him per hour, but then he can do the per diem at the 80% for the DOT. Okay. Again, we're subject to the 2%. Okay. Qualified work-related education. This education that meets at least one of the following two tests. The education is required by the employer or the law to keep the taxpayer present salary status or job. The required education must serve a bona fide business purpose of the employer, and the education maintains or improves skills needed in the taxpayer's present work. What's the most common thing that we can think of there? CE. Continuing education, or if I have a nurse, the VNA going back there, what can I probably do with her licensing? Most of them are paid by their employer, but okay. However, if the education meets one or both of the above tests, it is not qualifying work-related education if it is needed to meet the minimum education requirement of the taxpayer's present trade. It's part of a program of study that will qualify the taxpayer for a new trade or business. So you can't moonlight taking classes to become a nurse and write them off if you're an engineer. Okay?
But what if you have to sit proficiency tests every, say, 5 or 6 years, and you have to study all that stuff and go to classes for that, like, for example, physician's assistants have to do it. It used to be every 7, now it's every 10 years. But it says, meet the minimum education requirements of the taxpayer's present trade or business. That would meet the minimum requirement for license.
So you can't do it here, but let's say you're back to your nurse that wants to be an engineer.
Mm-hmm.
If they're going to engineering school, they can do one of the 3 education credits.
Yeah.
Right.
You could probably do something in a education situation.
This?
No, we're saying outside of it.
Okay.
Yeah. So if it doesn't meet here, you may be able to do that one of the education credits. You know, either deduct the tuition if it's a qualified institution.
Because if it's lifetime learning, is there any minimum class load for lifetime learning?
No. See, but my wife deducts her continuing education every year. She has to take something for 2 years. She deducts 100%.
Mm-hmm.
But that's her occupation.
Yeah. So it has an example here. Jill, a teacher, has satisfied the minimum requirements for teaching. Her employer requires an additional college course each year for each teacher to keep their teaching job. If the courses will not qualify Jill for a new trade or business, they are qualifying work-related education, even if Jill eventually receives a master's degree and an increase in salary because of this extra education.
dictated, you get.
Okay.
So if your licensing body, New York State licensing dictates it, it's deduction.
Yes.
That's interesting. So say I wanted to become an enrolled agent.
Mhm.
It's not required, but it could improve my skills as a tax return.
Mhm.
So therefore, that could be.
Could be.
But each now block, I'll let you do it. So you have-
Looking at it online.
All right. Okay. We have tax prep expenses. You can write that off. See, EG tax doesn't charge enough, so nobody usually qualifies for that. So, all right. But if they had H&R Block last year and somebody charged them $1,500, they might be able to. So, certain miscellaneous deductions subject. This is kind of one of those, hey, it doesn't fit into anything else. Here it goes. Okay. The big ones that we see in there would be the fact that it has to be something for what? To produce or collect income that must be included in gross income. All right? That's the big thing. So we look in here, one of the things it talks about, and everybody always asks, is legal expenses. It must be incurred attempting to produce, collect income, or a tax refund. Okay? So, is the legal fees for my divorce deductible? Is legal fees if I'm supposed to be receiving alimony in my divorce?
Yes,
It's for income.
yes.
Yes, because it's taxable income.
It's taxable income.
Yep.
I should say.
Yep, that's another one that is supposedly going to be dropping off too, is taxable alimony. Okay. Safety deposit boxes are in there. Some of the other things that, like it says here, appraisal fees determine value of casualty loss or fair market value of donated property.
Okay, say you send somebody to collection, so the cost of, because sometimes you have some little minor legal stuff that can go on for a judgment and that. That's deductible, but now when you can't collect, and you run it off as a tax or a loss, uncollectible debt, that's also deductible as well.
But where would the legal fees go on your,
Legal professional services on check receipt.
yeah, or E, depending on what it is?
Or E.
Yeah, yeah, if it's an eviction type thing, yeah. Let's see, other miscellaneous deductions not subject to 2%. Okay, all right. We have on this one, the big one is what? Gambling losses, okay? Yep, the gambling losses. And remember, that's why I showed you when we did the W-2G that I made sure that you notice that on the bottom, and it transfers over. Now, the big thing about that you go in to do that, if you don't do the W-2G, and this is just kind of for your knowledge, so when you go to e-file, because when I was on my own, it took me a while to figure this one out. Oops. Okay. If you go down here to your miscellaneous deductions not subject to 2%, line 28, and you go in there, you hit F9, it gives you the little other deductions thing, okay, on that one. But the thing I want you to notice is if I hit F1, Schedule A, and I go all the way down, right there, okay? The expense type can only be the following and must be spelled exactly as it appears in the case sensitive. This is one of those things. Remember why some people always wonder why I have everybody type in uppercase in the tax return? This is one of the reasons, because look at these. All right? I remember the first time I did somebody where I didn't have a W-2G, I only typed gambling loss, and I was pulling my hair out why this thing wouldn't e-file. Thinking, no, that's right. I did that right. Did this right.
So that's in the other miscellaneous.
Yep, but you under F1, you have to use this terminology.
Okay.
exactly that, otherwise it just rejects.
It's got a triangle up there with an exclamation point, which is usually proceed with caution. Okay, all right.
But you said if you send it for e-file, it doesn't take it, you still can't work out why it didn't have it. Okay. How'd you eventually determine that?
Doing this, digging. So, all right. I used all my get out of jail free that day, so I had to figure it out on my own. All right. So that's one of those things that it has to be in there. And you look at all these categories, they're all listed there. And when you put them directly on line 28, you got to put it by that verbiage. Okay. Just make sure on that. Make sure you know where that's at, David. So, because when you got that first e-file, it's driving you nuts because there's a funny space in it or something's not. So, all right.
Just like that.
What's that?
So you have to type it exactly, gambling losses.
It even says case sensitive.
Case sensitive.
Yep. Like I said, I had it uppercase as gambling loss. I didn't have loss says.
So there's 8 on there and there's 9 in our book.
K1's on there. I don't know, federal or state. Federal state losses, impairment related claim repayments. Schedule K1. Yeah,
Still ordinary debt.
might be. The other time I used this, just for point of knowledge, if somebody, I had an individual that they worked at the Delphi plant in Lockport, and they were out on disability, but they had, trying to think exactly, it's been a few years back, but they had to repay out of the proceeds from their separation, they had to repay some disability. And they had, so we had a thing where he had to do his Social Security claim repayments, and H&R Block had not put it on there. And it was because he had to claim the lump sum. I'm trying to think how it worked. I'd have to look it up again. But on there, but it was a swing of like $35,000 or $40,000 on the return, because they'd handled the repayment of Social Security claims because he got some disability. So basically, they had taxed a lump sum of in the 6 figures twice.
Tim, since we are kind of ahead of schedule here, can we go through those on 1140?
Yeah.
So the gambling losses to the extent of winning was reported as a yes.
That's correct. Okay.
Entertainer's costume that is not adaptable to streetwear, I'm going to say is yes.
Entertainer's costume that is not adaptable to streetwear. So that's kind of with the uniform?
Yeah.
Yes.
And then the cleaning and upkeep is also deductible.
Yes.
Okay, so traffic fine for speeding, no, because it's a breaking the law.
Nice try.
The preparation fee for having a tax return prepared is yes. The legal fee for the taxpayer to obtain non-taxable income, I would say no.
No.
Legal fee if there's non-taxable income, no. That's what we're talking about, because you have to be taxable income.
Homeowner's insurance for a taxpayer's personal residence is no.
Mm-hmm.
Subscription to a magazine related to the taxpayer's work is yes.
Mm-hmm.
The employment agency fee for a new job in the employee's current occupation would be yes.
Uh-huh.
Cleaning of a nurse's uniform is yes, like
Now,
number 3.
Yeah, this one I always go back and forth, because nurse scrubs, some people, it seems like it's their everyday wear. But-
Can't be adaptable streetwear.
Yeah, to me, there's a gray area there, but on the surface, yes.
Tools required in the taxpayer's employment, yes.
Mhm.
Appraisal fee to determine casualty, yes.
For 12, yes.
Okay. The expenses of a funeral is no.
That's correct.
He paid for investment advice is yes.
And like I said, on that one, 1099Bs, go that last page, look for that because it's always hidden. Okay.
Last page, okay. And then safety glasses for the use in the taxpayer's employment, yes. Dues to the National Teachers Association, yes. Business suit worn by a stockbroker, no.
That's correct.
Fee for safe deposit containing legal papers, yes. Appraisal fee to determine the value of property donated to a qualified charitable organization. I would say no.
Yes.
It is yes?
If you go back on page, where was that? Subject to the 2%.
So that's kind of.
Yep, on page 1137, appraisal fees determine fair value of casual loss or fair market value of donated property.
Okay. Safety shoes for work in a taxpayer's employment, yes.
Yes. You know, if they're buying boots, my next question is, are they safety rated? Just because I'm buying a pair of boots doesn't mean that it's necessarily rated to be safe where they were doing their job. You know, if it's not steel toed, it's just because they want a new pair of boots. So, but.
Can I get back to the fee paid for investment advice? Sometimes they vary that at 1.1%, 1.7% of the thing. A lot of people don't claim it, they just take it as a loss against what they have in there.
It depends how it's reported on the 1099B.
So let me ask you this, if you want to report it and take it as a loss, you should pay it outside of your IRA.
Yeah,
They are. Because they're
If it's paid inside your IRA, it's not deductible.
it goes against capital gains.
Right.
It's subject to the rules.
So you'd be better off passing them.
And it's a max of
outside for the tax.
What's that? I'm sorry.
You'd be better off paying it outside for the tax deduction. Especially if it's significant.
I'm sorry.
Yeah,
No.
a little bit of both.
This is to the amount of the
So,
gain or the winnings.
all right. And then the only other thing we have left is the limitation, where it talks about the limit on itemized deductions. And some people you'll see this, who is subject to the limit. The taxpayer is subject to the limit on certain itemized deductions if they're adjusted gross income, line 38, where you're right before you get into your itemized deduction line, is more than the following. Okay, so pretty sizable.
Yeah.
All right. However, I do see this often when I have somebody that is an executive for a corporation that also has in their W-2 their stock options. Because they may have a year where it's out of the ordinary, where they have a large influx of stock options. Okay. All right. Okay. That is chapter 11. Okay. All right. So we'll take 5 minutes here. And then-
Is the AMT calculated?
So in your workbook, it's page 154. It's on your thumb drive.
What's that?
It's on your thumb drive.
Here, you can have.
Oh, we're working 11-1 together.
11-1. Yep. Timothy. He's a security guard. All right. Okay. All right. So if you guys want to go ahead and get, like I said, we're going to do 11-1. So go ahead and get everything in. Make sure you read all the bullet points because he only has one W-2. So obviously a lot of the content in this one is within the bullet points that he has. Okay. So get all the main info in his W-2 and then we'll kind of work through everything else together. All right, so we're on 11-1. We have Timothy, no relation. He filed a 1040 last year. Tim and his ex-wife itemized last year on their 2015 tax return, okay? They received a refund of $2. Timothy just went through a divorce and it was finalized in December 2016. So what does he do there? On page 1 of our 1040, what are we checking? That he itemized.
Itemized, and we put $2 to the taxable. Refund.
But he did a joint return last year.
$1. So you do simple.
Oh, half of it's a $1.
Yeah, it's kind of odd that they got a $2 refund, but yes. So we have to put the dollar in there, right? Because who's claiming the other dollar?
Okay.
Yep. Okay.
Where does that dollar go?
On line 10. So when you check yes, your line 10 should be, and you go in and put your dollar in there. Okay. He liked to deposit because he has in his checking account if he gets a refund. If he owes federal or state, he'll send a check. He won $500 on a scratch-off ticket in a state lottery. Okay. So where do we put that one?
W2G.
Well, we don't have a W2G, so where can we put it?
21.
Yep, if we go down to 21, go in and get our worksheet 7, we can just put that gamble and winnings directly on line 1 there. So he has $500, okay? All right.
And you did that from 1040 line.
As we said, line 21.
21, you hit F9, and that was one of the choices.
Yep, worksheet 7.
Don't take the W2G.
We don't have a W2G. He just told us he won 500. There was no W2G.
No, I'm saying don't select that tax-wise, because there is an option for that.
Which we don't have a W2G, so we wouldn't select it. So, yes.
So as soon as you fill in that worksheet 7, it comes back up with gambling money.
On page 1 of the 1040?
21.
Yep. All right, so he wasn't a full-time student, and remember, we've always wondered why that's in there. Well, in case there's an 8880 there, okay? No EIC. Healthcare, he had healthcare the whole year. So we can go to our ACA worksheet and check our boxes that he had it the whole year, okay? Now, Timothy paid the following expenses for the year. He wants to know if he could file at Form 1040. Well, as I've talked about, when we do it, if he's got all these things, well, let's see. I'm not going to charge him for the Schedule A if I open it and do stuff on it unless it actually applies. All right? So on our tree on our left, because we selected yes, that Schedule A will pop up. Okay? So let's go through each thing and see if we can figure out where it goes. All right. He has receipts for the following. Real estate tax. Yep. On his primary residence. So on our Schedule A, we can go to line 6. And there's one that says real estate taxes on your principal residence. Okay. Everybody got it?
Don't listen to up.
Okay. What's he have next? Mortgage interest. Okay. Deductible? Yep. So we can go down below. Chances are he got a 1098. So on line 10, that very last one, we can put that in there for $69.84. Okay. Cash donations to church. Okay. So we have that. If we go to gifts to charity, line 16. Yep. Hit F9. And what do you want to get in there to get to? Our little A detail sheet. Okay. Open that up. We're going to go down to our cash contributions, and we can just put church. Yep, cash contributions there. We go down and put church. He gave $260. Okay.
Now that red star, what does that mean before the 260? Name of charity, red star, amount.
See what it says up above?
Oh, yeah.
Otherwise, the only sort regarded as cash.
Okay, yeah.
Okay, all right. We have the next one down, says charitable donation withheld from paycheck. Did anybody pick that up on the W-2?
Yeah, under 14, I put charity.
Yep.
We still have to put that in.
It has to manually carry over. You'll see it, the one you see all the time is Wegmans United Way, because all their employees usually give $1 or $2 a week or their paycheck.
I took it off 14, I took it off 3. I put in charity in the amount. Is that okay?
That's okay. It's recorded there, but because it's in 14, remember, things in 14 don't carry over. Things in 12 do. Okay, so on 14, what do we have to do? Yep.
So we would add that to gifts by cash or check.
Yep, I just usually, and like I said, most of the time you're gonna see that as United Way.
So put it as cash contributions as well.
Yep, so you can just put charity W-2, and we can have the amount was how much?
533.
Yep, 533,
793.
okay. Work uniforms. He's a security guard, right?
So now we got subject to 2% AGI.
Yep, so we have to go down to his threshold. Unreimbursed employee expenses. What do we think? Do we want to do anything for a 2106? Or do we want to put it on a separate line? Yeah, let's do the 2106 easy so we can kind of see it work, all right? So go to that line on 21,
Back to line 21.
Schedule A, line 21. Mhm. And then let's do the 2106 EZ. All right. And if we look there, kind of what we saw in the book, we got some things that says you can use this form only if the following apply. Your employee deducting ordinary and necessary. You did not get reimbursed by your employer for any expenses. You're using the standard mileage rate for your vehicle. Okay. If he has any reimbursements, we're on that. Okay. All right. So down below it says figuring your expenses. All right, we got part 1 and part 2, okay? First thing we have there is work uniforms. All right, so what do we see there? Anything that it would apply to?
Yeah.
We could probably put on line 4, right?
Right.
Business expenses not included. So if I go in there and I hit F9, what do I have? A scratch pad, okay? I'm a big scratch pad person. Okay, so I can put in there work uniforms. All right, and he had $75. Okay, what's the next one he had? Union dues. Yep, that one's good. We can probably put that on the scratch pad. Does it matter that we put it on the 2106 and not on the other spot? No, because it's still going to be the same, because it's still going to be in that area where we'll calculate for the 2%. All right, professional publications. He's probably got, you know, Guns R Us or something. I don't know, whatever for security guards. Okay. Okay. All right. Tax prep and electronic filing. Yep. So we're pretty much done there. We're going to go back to our Schedule A. And where's that one fall under? Yeah, line 23 says other expenses stuff. So we can go in there where it says type, hit F9, gives us a little miscellaneous deductions, Schedule A, line 23. And again, kind of looks like a scratch pad, but it's going to be in that category. So we can put the safety deposit box in there. Okay. Oops, I skipped tax prep, didn't I? Okay. $50. Yep, they're right there above that line is the tax prep one. That can go directly in. Okay.
On the same worksheet?
Nope, it can go right on line 22.
Schedule A, it says Schedule A, on 22?
Yep. Schedule A, line 22. Okay. Yep. All right. Okay. He has gambling losses of $720.
But there's no winnings to offset it.
Yeah.
Yes, sir.
Wait, there are winnings.
How much was it? So how much can you take in losses?
500.
Yep. Okay. All right. And where's that go? Is it subject to 2%?
No.
Nope. So it goes on line 28. Again, we go to line 28 on the Schedule A. Hit F9. We got a bunch of choices, but what do we have there? Yeah, we can't put it there because we don't have a W-2G, but there's one that says other deductions. And remember that thing I put up there? All those things that has to be typed a certain way. So you have to type in gambling. Make sure you spell correctly. Law says even though he only had one loss. Okay,
That's the other deductions.
Schedule A, line 28. Okay, and we have $500 in there.
You put 500 or 720?
Can he take more than his winnings?
No.
Okay, so put 500 in there. Okay, next one, legal fees for his divorce.
No, no.
Okay, why?
It's not work related.
No. Well, that's
Could
true
be,
too,
could be
but I
result.
mean, it's just not allowable.
Because,
There's no income
exactly.
created.
Yep, if it had something to do with alimony,
Right, so if you had to pay.
He was fighting his alimony, meaning that she didn't pay him or something.
if it had something to do with taxable income, it'd be a different story. Okay. Next thing we have is required training for being security guard, unreimbursed.
Yes.
Yes. Okay.
That's gonna be under business expense.
Yeah, we can put that on the 2106. Remember our little scratch pad? So if you go to your tree on your left, you'll see your 2106 where the form numbered ones start. Remember where we put work uniforms and all the other stuff? And we have training. We can just type training. And how much was it? 400? Did you find it, Patrick?
Yeah, I got it.
Okay.
Put under training.
So you got that little,
Expenses not included, F9 onward. Where would I put the?
go to your tree on your left. You got your 2106.
2106 up, yeah.
Okay, but look right below it on your tree. What do you have there? Did you do a scratch pad?
But nothing comes from.
Yeah, it is good. There it is.
Okay.
Put that in there underneath everything else.
Yep, yep. Okay, has its own line. 22.
22.
Oh, I'm sorry. I've got two conversations going, Patrick. His training's 400.
Would you put the tolls in the parking as well?
Well, we're going to do that one next. All right. So next line, we have mileage for training in August. Okay. So we're going back to our 2106 EZ. Now, the one thing we forgot to do, what do we forget to do on this one? Make sure you click taxpayer. And what is this occupation at the top?
I put that in.
Yep.
You already said that.
Okay. Now, where's our mileage go?
On the
Business
2106.
miles.
Part 2. Okay. So we have this car that he put in service when? 2008.
Well, the 21, the 2016, you've got it here, business mile.
Yeah.
Does it qualify
I
for
put it
business
right
mile?
there, and I would put the.
Yes, for his training.
535, so that's 139.
You can use the EZ for that one.
What's that?
You can use the EZ.
Nothing was reimbursed.
I'm sorry?
Nothing was
Is
reimbursed.
that a standard mileage rate with vehicles?
So we got nothing reimbursed, you can use the 2106.
As it says at the top of the 2106 EZ. That's what I said at the beginning. Okay. So with the mileage on business, we can put the 260 in. Okay. Once we put that in, what happens to it?
Calculates the 4 cents a mile.
Yep. And where did it carry to? Look at line 1.
Oh, yeah. Vehicle expenses using the same amount.
Yep. And then make sure you answer your questions.
And then the parking fees, tolls, and that's what we're doing.
Yep. So right there, it talks about tolls for work expenses while away from home. So he's got tolls, parking, $30. And then the next line down says travel expenses for overnight, which is lodging. What do you have there?
280, where's the one? Meals, will that be on the meals?
Nope. Look at line 3 on the 2106. Okay.
280.
All right.
Yeah, you have the EZ or the regular one?
Easy.
Okay.
How come
Why is mine yellow?
he's yellow?
My vehicle expense line is yellow.
Is what?
Is yellow, the vehicle.
Well, it's saying it's coming from. Yeah, not it.
Are you on the 2106 or 2106 EZ? Okay. So your vehicle expense, did it carry up there?
Oh, I didn't put the Should we have put the 260 somewhere else?
In part 2,
Oh,
if you look at 2106 part 2.
Oh, okay, part 2, okay. Business, 260, there we go, okay. I put 260 there.
Mhm. Okay.
So that you,
I'm just saying.
yeah.
And you know why it's training. Why does it come back that says,
When did you
on
place
line
your,
4,
it's
business
asking, when did you
expenses not
place your
included?
vehicle in service?
What's that?
Of the EZ, I get business expenses not included, 923.25. Oh, that's because of depreciation. Oh, I just the 140. Calculated depreciation of the car.
No, the 942.
Yeah, wouldn't it?
That's your scratch pad.
Oh, right.
Okay.
Yep.
All right. Okay.
Okay, so that's
I would answer that question.
All right. Okay, so David, what'd you come up with on this one?
I had 240 was the refund and 181 was owed to the state.
Uh-huh.
That's not the answer though.
That's what I come up with too.
And that we figured out the reason was that how they got to that answer is they transposed the 400 for the miles instead of 260. And that comes up with an extra $30.
Really?
Oh, we got it.
Because they're right next to one another or something. I don't have the sheet in front of me, but.
Okay.
I had it in the last.
Makes sense.
But
Isn't there a
somebody did that
formula?
on-
I remember
somebody
from
did
my
that on-
accounting classes, isn't there a formula that you can do based on the difference between numbers that's, if you transpose them, it's like if 6 and a 9, I forget what it is.
That's a long time ago. 30 years ago. But I know what you're talking about.
Yeah. I remember that was my managerial accounting class. I took that one twice.
Now, they said when I did triple integral calculus, you never use this again. And it's true, you do use it in engineering, all that stuff, then 20 years later, now I gotta help my nephew out.
Yep.
So I gotta learn it all over again.
Yep. So, all right.